Hey everyone, I'm Paul Moore. I'm here with BiggerPockets, and I'm so excited to join you in this noon Eastern Time session of BiggerPockets Live. We're going to talk today about a great but unexpected path to real estate success. Stop investing in real estate deals. Now, I know that sounds crazy coming from somebody at BiggerPockets, and we're going to dive into this in a minute. But before we do, I want to hear from you. Where are you from? What do you do in real estate now? And I want to make sure you can hear me. So give me a thumbs up if you can hear me, or let me know if I'm coming through loud and clear. Hey, Todd Connolly, where are you from? Thank you for joining us today. Again, Paul Moore with BiggerPockets and Wellings Capital. And once I am sure that you can hear me, I am going to dive right in. So let's get started here. So, hey, Todd. Okay, you can hear me. Thank you. All right, you're from Key West. Hey, Jerry, how you doing? Houston, Texas. Hey, do me a favor. BiggerPockets, we're here in the middle of the workday. It's 10 o'clock Mountain Time, 9 o'clock California time. Give me a thumbs up, a like, or a share if you like what BiggerPockets is doing. If this content is providing value to you, give me a thumbs up, like, or share, and that'll tell YouTube and Facebook Live that we should stay on the air, and it'll keep me from getting fired, okay? So, hey, before we launch in, I'm going to give you 10 reasons not to invest in real estate, okay? So it may sound crazy, but 10 reasons not to invest in real estate. Number 1, you really love your savings account. Number 2, reason not to invest in real estate, you really love paying taxes. Number 3, you'd rather own paper than a physical building. Number 4, your mattress would not be as comfy without all that cash stuffed underneath it. Number 5, reason not to invest in real estate, you're wary of that term mailbox money. Number 6, you want to make sure stockbrokers get their fees. After all, they don't make enough money, right? Number 7, reason not to invest in real estate, you prefer CDs, either the banking product or the music variety. Hey, we're not here to judge. Number 8, you'd rather work for your money than receive passive income for doing nothing. Money for nothing. Number 9, you want to teach your kids good old-fashioned values, including putting every penny into a savings account. And number 10, reason not to invest in real estate, you don't mind losing money to inflation. Life's more fun when you know the money you've saved is worth less today than it was yesterday. Okay, we're having a little fun here. Hopefully that was fun for you. Hey, welcome Jesse. Welcome Goldie Baby from Cincinnati. Hey, Deepak. Hey, Edmund from Massachusetts. Hey, Scott. All right, Kevin, off duty. Oh, I'm not supposed to say it out loud. You said. Okay. Hey, Lawrence from Broadway, North Carolina. Mayrave from New York City. Michelle from Ohio. Okay, great to have you on. Today, we're going to talk about an unexpected path to real estate success, and that is by not investing in real estate deals. So let's get going. So Sarah is a really smart lady, and she was on the phone with me, and she was talking about investing in real estate, and she had a lot of angst. She was all bound up, and she was talking about her frustrations with investing, and I asked her to tell me more, and she informed me that she was investing in real estate in her city was way too expensive, and she said she wanted to invest out of town. She wanted to invest in a different city. And so she was asking me about that and talking about what it might look like. She was talking about, I have to get a realtor. I have to find contractors I can trust. I have to find a property management firm. Oh, and I have to find a property at a good deal. And there's hardly any good deals in multifamily right now. But she was just in angst about this. She didn't know what to do. She had a lot of money. I think she had over $1 million to invest, and she didn't know where to invest it. And we were talking about what it might look like for her to not invest in real estate. I mean, she didn't like the ideas of getting 3 a.m. phone calls from a different city for a backed up toilet. and all the other stuff that could go along with it. She was talking about what it would look like to manage the property herself with a contractor friend. And she finally came, we talked about investing passively. I said, what if you could find a syndicator? What if you could find someone else you trust and invest passively with them? And she's like, well, it's hard enough to do this in my own backyard. How could I trust somebody else? And I said, well, there are syndicators out there who have been doing this for like 20 or 30 years and who have incredible track records. And all of a sudden, the light bulb went off for Sarah. And she goes, wait a minute. Why should I work harder than I need to make less than I could? Sarah realized that she could invest in commercial real estate with a trusted third-party syndicator in a different location or her location, and she could just basically narrow her effort to writing the check for the investment and then going to the mailbox every month or every quarter to collect her distribution checks. And when she realized this, it was like this whole new boom idea opened up to her. And I said to her, there's a downside to this. One downside is you're going to have to trust somebody else. Downside number 2 is you're not going to get the thrill of the chase. You're not going to get the thrill of getting to do this on your own. And number 3, you're not going to get the rush of excitement of dealing with new tenants and toilets and trash and all that. And she kind of knew I was joking on that. So anyway, so I realized this is not going to apply to many people here on BiggerPockets. So what we're going to do in about 5 minutes, I'm going to wrap this up, maybe 10 minutes, and then we will take some Q&A on anything on your mind. This may apply to some of you, but not everybody. I know a lot of you are doing this full time. A lot of you have already quit your day job. A lot of you are flipping or building a single family portfolio. My hat's off to you. I've been an author. I've written 3 books on real estate. I could do this, but I choose not to. I choose to take this path of trusting other people who are experts. This is what Warren Buffett does. He's built one of the largest companies in America, and he doesn't make anything. He doesn't write any insurance policies. He doesn't do, he doesn't do his own work. Warren finds great people who are experts in their field, and he invests heavily with them. Because we all have, some of us have a lot more money than time, and some of us have more time than money, and some of us have expertise in a certain niche that's really, really specific where there's a lot of profit to be made. So by putting together, the money, the time, and the expertise into one package, sometimes we can do better off by investing with somebody else. Now, this may not apply to everybody, but it may apply to you who, for example, have watched those flipper shows on HGTV. I was on one once, by the way, and I really believe it is that easy, but in your heart of hearts, it's not. Or perhaps you've got the real estate bug and you want the historic returns and tax benefits of commercial real estate, but you've got a 9-to-5 job. Maybe it's a high-paying job, and you can make a lot more money staying there and investing passively. I recently did a show where I talked about how to turn $100,000 into $4 million or more, just investing passively and just basically finding the right operators and trusting them and investing with them. You can get all the tax benefits, Mike Hamner, of commercial real estate by investing through a third party that you could if you owned it and operated it yourself. This may apply to you if you're spending all your spare time, evenings, weekends, lunch hours, vacations, chasing that elusive deal. Or if you've got a deal and you're spending your time, where you could be doing something else, painting closets and, putting in shoe molding and replacing cabinets. You could probably make better use of your time. You might be making minimum wage doing this yourself. This might apply to you if you've tried to build a portfolio of rental houses and find out it's much harder than you thought. And it might apply to you if you fear a recession and you really want to be involved in something that is recession resistant. So like I said, it doesn't apply to all of you, but I was talking to an oral surgeon recently, And he was telling me, he said, I'm building a 20 house portfolio in the Pacific Northwest. I'm trying to build a 20 house portfolio. I'm on house number 3 and it's driving me crazy. He said, I'm on the phone with painters before one surgery, and I'm on the phone with trying to fill a vacancy before another surgery. He said, my wife's an orthodontist, and this is driving us crazy. We only have 3 houses. We've got 17 to go. I just don't think I can do this anymore. And a lot of people find themselves in that situation. Now, if he worked a few more hours a week, he could make enough extra to probably invest, I don't know, $50,000, $100,000 a year, maybe more, passively. This is probably a better path for him. Did you know a great majority of the Forbes 400 wealthiest people in the world invest in commercial real estate? Well, until recently, there's no way for us, the average investors, to invest. You might have wanted to invest in commercial real estate, but realize that it's almost impossible to get there. But good news, the Jobs Act of 2012 has opened the door for millions of people to invest. There's syndications, there's funds like my company operates, there's crowdfunding websites that allow you to invest through them. There's all kinds of opportunities. The good news is there's all these opportunities. The bad news is sometimes we might not know who to invest with. We might not know how to evaluate this syndicator. We might not know the best way to find the right person. In fact, we might even get burned by investing with the wrong person. So it's really, really important. Now you might ask, hey, if it's this easy, why doesn't everybody do it? Well, I mean, like I said, I've written 3 books on real estate. I've done hundreds of deals, but I choose to do it this way myself. If, hey, Ritik from India, you said, can you do this from abroad? Yeah, this is something you can do from India. You can invest in commercial real estate. You can do it from California, India, Montana, anywhere you are. So why doesn't everybody do this? Well, a lot of people don't know this opportunity is available, and this is one of the purposes of BiggerPockets. We want to educate people without all the hype. Number 2, many investors love the thrill of the chase, and they want to do it on their own, and I totally get that. Some investors, like I said earlier, don't know who to trust and don't know how to vet a good operator. But there are resources online. There are forums, BiggerPockets, other places where you can learn to vet the right operator. A number of 4 reason you might not do this is you're not an accredited investor. And if that's you, there are still opportunities. There are great websites and crowdfunding portals available where you can invest and not be an accredited investor. Now, there's a few of you who have the risk tolerance, the patience, the deal pipeline, and all the skills and money to do this on your own. And my hat's off to you. You should do that. I did that for years. And I've actually found that investing passively for me is a better way to live and a less risky way to live and a more profitable way. So I'm in a mastermind with a bunch of people who are providing opportunities like this, multifamily syndicators, self-storage syndicators. And we are regularly seeing investments, that are, providing our investors with 15% or more annual return. It's very hard to get that with multifamily right now. Some of these are multifamily, but it's hard to get those deals. It's easier to get those in self-storage and mobile home parks, which is where I'm investing right now. But there are opportunities abounding with the right syndicator if you know who to call. I was on the phone with somebody the other day who had been doing deals for years, and he's like, I am tired. I'm exhausted. I'm tired of doing multifamily. I'm tired of doing any deals. I just like to find a great third party to invest with. I want to make sure I get a K1, not a 1099, so I can get all the tax benefits. And I'm just going to do that, and I'm going to kind of ride into the sunset, enjoy my life a little more without trying to operate and own all these deals myself. And so we find that a lot of people, once they realize this opportunity is available, they want to invest passively. Now, like I said, it's not for everybody, and there may be some people on this right now who disagree, and that's totally fine. Now, I've got joining me today Nate Shields. Nate is from Madison, Wisconsin. He's also known as Dude Real Estate. He's going to be answering some of your questions I don't get to. Thank you so much, Nate. But if you need a realtor or somebody to help you with investment real estate anywhere in Chicago or Madison, Wisconsin, that Nate is a guy you can ask about that. So if you've got questions about anything at all that you want to talk about, whether it's investing passively, which is what we just covered, or if it's anything else in real estate, now is your chance. We've got about 20 minutes left. If you've asked a question on Facebook, please copy and paste it back in, because I might have missed your question and my Facebook feed only has 5 questions at a time on there. It's just how it's set up. If you're on the YouTube side, I'll try to start answering some of your questions. So Ahmed says, I found a rehabber on BiggerPockets and I'm investing in a flip with him. Okay, that's what I'm talking about. You found somebody, Ahmed, who already has a system. They already have experience. You can invest with them and you can probably make a good portion of the profits. Nicola says, no, thank you. Okay. Mike says, what about getting the tax benefits? Already answered that. Lionel says, I want to invest in India so I can build wealth in India. That's awesome. If anybody else on here wants to answer that, that would be great. Somebody said, I saw this title. What do you mean by stop investing? What I mean is, don't go out and try to find your own deals to own and operate. Invest passively with somebody you trust, like Warren Buffett, one of the wealthiest guys in the world. This is what he does. He doesn't build his own companies. He invests in other people's great companies. I think he's pretty smart. So that's the path I'm taking from now on. Amy says, how do you find your mobile home parks and do that passively? Amy, the way I do it is I find great operators who already have deal pipelines. I've got one guy who's been doing it since 2003, another guy since 2006. They've got relationships. There's approximately 100 mobile home park specific brokers in the U.S. And these guys that I invest with, they have teams of people who are already in touch with those brokers and they're getting access to those deals. Again, it's the same thing. I'm investing passively with an expert. Lawrence says, so I've been trying to buy some land that was offered 5 years ago. Family bought my land from them for a year. And she always says, I started low and now I've come close to doubling my offer. What should I do or can I do to make this happen? Okay, Lawrence, I recommend you go to Mark Podolsky. That's Podolsky. He's also known as the Land Geek. Mark has dozens and dozens, probably hundreds of podcasts and blog posts about how to buy land. Okay, so Lawrence, that's the best thing I could tell you. You can maybe offer some creative financing. You know what they say, my terms, your price, or your price, my terms. Wait, anyway, that's the same thing, but you get the idea. You can actually sometimes offer different terms and meet their price. Like maybe you could say, okay, but I'll pay your price, but you hold the paper at 2% interest or something like that. And you can actually come out ahead and still give them the price they want. So hopefully that helps. You're welcome, Amy. Hey, Kevin, ever invest in Jackson, Mississippi? Yeah, I actually started a company in Jackson, Mississippi back in 1996. We did nurse staffing there, but respiratory therapy staffing, but it didn't really go anywhere. Low home prices and good rent. Okay, so anybody want to connect with Kevin Strong, you can do that on BiggerPockets, and you can learn more about Jackson, Mississippi. Todd says, can you recommend a course or other method to learn how to get wholesaling buyer and seller leads? Nate, can you help with that? I don't actually have one, Todd, but I'd put that question out on BiggerPockets. Wholesaling is a very, very labor-intensive way to make a lot of money with low risk in real estate. Basically, I told you some people have money, some people have time, some people have experience. That's for you who have more time than money. You're going up against some big dogs, though, when you're wholesaling. I know a guy in Little Roanoke, Virginia, who sends out $65,000 in postcards and letters per month. $65,000 a month trying to get wholesale deals. So you're going to have to kind of fly under the radar and get those. The way I would get wholesale deals is just get in your car, fill it up with gas, and drive around. I mean, up and down every street, looking for high grass, shades pulled down, mailbox, with stuff running out of it, like basically empty houses. Drive at night and look for houses that look like they're empty. I hope that helps. That's how my son did it. Dan Jenkins says, who determines your accreditation as an investor, and does the criteria vary from state to state? Great question, Dan. Generally, accredited it's a federal thing. It's $200,000 in individual income, $300,000 with a spouse if you're filing jointly, or $1 million in assets, not including the home that you live in. You can go to verifyinvestor.com. That's verifyinvestor.com. Pay about $65 and you can get accredited. Or you can go to your CPA, certified financial planner, or attorney and get them to sign a letter for you, Dan. What we do for my investors is we have verifyinvestor.com streamlined right into our process, and we don't charge our investors. They can do it free when they invest with us. That's just how we do it, and some other people do it that way as well. Deep Sea JB says, always get references from people who you planned to invest with. Look at what they have already completed. Absolutely agree. Absolutely. That's what, we get questions like that all the time. We provided references. Carrie says, hey, I'm from Madison. All right. So the question is, what kind of multifamily opportunities there? Hey, Jamie Sweet from, I don't know where that is offering equity real estate crowdfunding shares. Fix and Flip is offering equity shares open to Arizona residents. Okay. 8% preferred return plus 30% of the profits. 30% of the profits. Thoughts on crowdfunding? Yeah, I don't know Fix and Flip, Jamie, but crowdfunding websites and they offer non-accredited opportunities. Okay, so the problem, Jamie, is the crowdfunding sites I don't think they can do the level of due diligence that you and I could as individual investors. So take their due diligence, read what they say, be glad, check that box. But we have a list of and we don't publish this list except to our investors, but we have a list of 24 things we're looking for in a syndicator when we invest with them. That's what my company does. We invest with great operators, great syndicators, and we have this checklist that we go through. So being on a crowdfunding site, that's a big check on the checklist. I mean, if they're on the crowdfunding site, that's great. But that's one of many, many things. You probably ought to go meet them in person unless you're just going to invest a small amount of money as a test. Chris says, do you have some sort of calculating sheet to see if a property is profitable? Yeah, BiggerPockets has some of that stuff. If you're not a BiggerPockets Pro member, you should consider becoming a BiggerPockets Pro member, because BiggerPockets has calculators that help with that type of stuff, as Nate just said. Maybe Nate can give you the link, Chris, for that. There's also Michael Blank, Blank, who has a multifamily syndication worksheet. He's a BiggerPockets writer and speaker, and he sells this for $100 or something. It's a multifamily deal, syndicated deal analyzer. Now, if you're in self-storage, where I'm at, a guy named Scott Myers, who's also a syndicator in self-storage, he has a deal analyzer for self-storage. So you can check that out. There's all kinds of other ones as well. Jamie Sweet says, check out the due diligence we provide. Oh, so Jamie, are you with Fix and Flip? Okay, cool. Dr. Shea Glenn says, thanks for the info to Nate. I'll be looking into your channel. Great. So yeah, Nate Shields, Dude Real Estate, has a channel where he has all kinds of information for investors. Nate, can you share that channel with us? Maria Isabel says, where can I find an emerging market? So Maria, you're going to be looking for cities that have positive net population migration. You can Google that. Low unemployment, a diverse economy, maybe some universities, healthcare and government mix, not dependent on one big industry, not dependent on just the military. Those are some of the things we're going to be looking for. The net population migration is a big one. That means people are moving into the area and they're not moving out of the area, net at least. So hopefully that is helpful. Okay, so what other questions do you have? We're going to wrap up a little early today. I know it's the middle of the workday for a lot of people. So if I haven't answered your question, please, what's my website? Okay, it's wellingscapital.com. That's WELLINGSCAPITAL, wellingscapital.com. Someone says, how do you do an interview for a person you may want to partner with, just to weed out the bad people or those who are not serious? Okay, so beauty and the soul. Can you be a little more clear with me, like what type of person you're talking about? Are you the person with the money and you're looking for a syndicator? Or are you the person who's a syndicator and you're trying to review investors? Dr. Shea says, I have $25,000 and want to start investing, hoping to replace my 9 to 5. Okay, that's awesome. Dude Real Estate is answering you on that. There's certain things you could do to turn that $25,000 into, 100, maybe flip a couple times, and then take that 100 and invest passively. That's what I would do. Hope that helps. Okay, Deep Sea says, grow and stash your cash till the next crash. Hey, that kind of rhymes. Do you all know that we're in the longest expansion in U.S. history, longest economic expansion? And if you read Howard Marks, it's a book I recommend regularly. It's called Mastering the Market Cycle, Getting the Odds in Your Favor. He says there's 100% chance there'll be another recession because there's people involved in the decisions that are buying and selling things. People have optimism when they should be fearful, and people are fearful when they should be optimistic. Sounds familiar, doesn't it? Warren Buffett said, of course, his most famous quote is, be fearful when others are greedy, be greedy when others are fearful. Well, there's going to be another recession. The question is, how deep? When will it start? When will it end? And how will it affect you? So my advice, because of this upcoming recession, whether it starts in a month or a year or 10 years, it won't be 10, is to find recession-resistant assets and try to find people to partner with to invest in there. And that's exactly what we're doing. Wellings Capital is looking, we've kind of narrowed it down to self-storage and mobile home parks. You can look at the data. You can actually visit my website and we'll send you a free special report on mobile home park investing or on self-storage investing. We just completed that report today. And so these are more than just a little special report. These are actually full ebooks that we'll send you free. You can visit us info@wellingscapital.com. That's our email address. And you can also visit the website, wellingscapital.com/resources, and you can get a copy of the self-storage ebook or the ebook on mobile home park investing. We think these are the two best recession-resistant opportunities in real estate investing today. But we also recognize that healthcare, real estate healthcare is, like owning office buildings where there's healthcare being provided is a great opportunity, and so is senior housing. There's a lot of statistics that you all have heard about senior housing and how it is going to continue to grow, and there's actually surprisingly little written about it. And so it's something that Wellings Capital will be looking into more in future years. So senior housing, healthcare, but like I said, we love self-storage and mobile home parks. It's very hard to get into those yourself, into those big commercial deals. That's what I'm talking about on this show. I'm talking about partnering with an expert that somebody has already carefully vetted, somebody who's already been giving great real estate returns to their investors for decades. And that's what we do. I mean, we're partnering with those operators. We're not an operator. Kazi says, how do you get rehab done on a rented property? Might be needed to get to town to approve for higher rent, especially when you're remote and you don't know any contractors or property managers. Kazi, that's tough. And I think that's a great question. I think you need to find a local person, a property manager you can trust. This is why I don't want to go to too small of a town, because I want to make sure there's great property managers there and more than one that I can trust. I would get there to town and get on the ground, find these people, basically develop a relationship with them and then trust them to manage the rehab. I hope that helps. How do you find the rehab portion after you've already used some of the funds for the purchase of the property? You can find a partner. You can find them on BiggerPockets. You can sometimes get hard money loans. And you can sometimes use a self-directed IRA. You've got to be really careful how you follow the rules if you do that. I would definitely try to find a partner. That's what I would say. Hey, D. Boko. Okay, it's fine that you're late. You can watch the recording. Logan says, Kazi, network and try to build relationships. Maybe try a BiggerPockets group meetup. Totally agree. Excellent. And Nate Shields, Dude Real Estate, has some advice on this as well. Okay. So we are coming to the end of our show. So if you have any more questions, if you're on Facebook, YouTube, or BiggerPockets Live, ask them now, and we'll try to answer. So Lisa says, how do I independently confirm the track record of a syndicator before investing with them? It's hard to independently confirm it. You can get their track record, Lisa. I see you're a Canadian. No, the accredited investors rules do not apply to you, Lisa, if you're in Canada, if you live and you're a citizen of Canada. It's hard to get the independent track record. The best you can do is get their track record from them and then go do everything you can to independently verify it. Try to get investor references, try to ask them for return, like information. You can ask them for financial records, but that's really hard to really dive in and get to the bottom of, Lisa. But that's something our company, we spend a lot of effort doing that, but it's not easy, and it's not easy to explain it on this short of a call. Wendy says, do you have any suggestions to find investors for a residential assisted living project? Okay, so Wendy, I think that's a great project. I think that's a great type of project. I would ask around on BiggerPockets. You could start a podcast. You could blog on BiggerPockets and basically just get your name out there and then start interacting with people who are interested in investing. Those are some quick suggestions. Yeah. Okay, Wendy. So we're on the same page here. Wendy, we're not investing in that right now, but BiggerPockets will. Wellings Capital, my company, will be likely investing in senior living within 2 years. We're kind of slow. We take our time investigating, different asset classes and different operators. We just don't jump in too quickly. Logan says, curious to hear your opinion on flipping versus buy and hold trailer parks. Both are great. I know all circumstances change the decision, but what's your general thought overall? Logan, if you can get a really, really good deal on something and get it from mom and pop standard up to a standard of a REIT, and like an institutional grade, you generally want to be 100 slots, 100 lots or higher to get a REIT to be interested. And if you can sell it, you can sometimes, you could literally double or triple your investor's equity in about a year and a half doing that. And my company invests in deals like that quite regularly. So if you can improve the value quickly, there's lots of ways to do that. I'm looking at about 1,000 pages of books sitting on my desk about how to improve the value and how to buy right and sell right mobile home parks. There's lots of ways to do it. So there's not just one easy answer, Logan, like you said. Chris says, opinion on investing in small multi-families. I think that's what you said, in a state that is relatively stagnant in population. I would try to invest somewhere else, Chris, if possible. Hope that helps. Stagnant population is not a great thing for multifamily. You're going to need to really, really get a great deal. Callie says 401k versus buy and hold. Not retiring, IRA, income limit exceeded. Cali Valley, Thanks for joining us again. I know you were on the last show. Can you just explain that a little more? I want to make sure I understand it. Maybe Nate can help as well. Cad Turner, is it still popular to rent out rooms in a single family home? Yes, specifically in military areas. I know it's very popular in college areas and it can be very profitable. I have friends in Minneapolis doing this and they're making a lot of money. Military areas, I don't know. It's a great thing to check into. If anybody else knows, please answer. Cad Turner here. Jimmy Gonzalez says to build vendor trade line. Do you recommend programs? If so, any recommendations? I don't know. I'm sorry. You stumped me on that one. Maybe Nate could help on that. Giggity Goo 52 says I'm going into the military and want to house hack. Would you suggest I use an FHA loan before using my VA? Yeah. I think that's exactly what now I'm not an expert on that, but I think that I would lean toward doing that if you can. You want to live in one unit and rent the rest. That's great. Cali Valley Giggity. Okay, that's definitely how I want to start out, but I'm afraid of running out of my entitlement and using as much leverage as possible. Yeah, I don't know. Jimmy says seller financing is awesome. Paul, can you talk about that real quick? Yeah, I mean, a lot of mobile home parks, the owners, for example, believe that they can't even do any bank financing. That's not true at all, by the way. Some of the largest investors in the world, like Warren Buffett and Sam Zell, invest in mobile home parks or manufactured housing. So you can get bank financing, but a lot of owners believe when they sell, they have to offer seller financing. And there's a lot less red tape, a lot less hassle. It's non-recourse for you as the borrower, and for the seller, they don't necessarily have to claim all of the sale on their taxes. If it's a note where it's like a promissory note and time, it's a sale over say 20 years, they may be able to reduce their taxes or delay their taxes. It's a great way to go to convince an owner to do seller financing. I'm just talking about mobile home parks. It's harder to get other people to do seller financing now because the real estate market is so overheated. Jeff says, best place on learning how to buy trailer parks. Yeah, there's a Mobile Home U, MHU. I just went to that 2 weeks ago in Las Vegas. Mobile Home Park Investing Academy. There's other places as well. You can Google that online, but I know that the Frank and Dave Mobile Home U, MHU Academy is a tremendous resource. Fiva De General says, best way to get funds starting off in investing, business line of credit or hard money lender. Yeah, if you can get a business line of credit or a home equity line, that would be better. Hard money lender would be my last choice, but you can do it if you know for sure that you have a virtually guaranteed exit plan. John says, starting out and trying to understand how to evaluate a potential market to invest in. It's easy to research the why, but how do I find the why not? Yeah, it's really important, folks, to know the why. But it's more important to know the why not. And so that's a great question. There's about 20 different criteria we use to evaluate a market. You can reach out to me at BiggerPockets or at wellingscapital.com/resources, and we can give you a list of some of those criteria we use to investigate a potential market. Cali Valley says, not retiring. I'm contributing 22% of my income to my 401k. Should I reduce contributions and use for a buy and hold? Now I understand your question. You could convert that 401k to a self-directed IRA and then you kill two birds with one stone. I don't know. Buy and holds are tough. It's really hard to get a buy and hold portfolio. I mean, it would be really hard for me. Some people are doing it. That's something you just have to investigate the pros and cons of each one. I like the idea of having a self-directed IRA because you can do both. Kathy says, I'm 62 and interested in building cash flow. Yeah, I agree. I would look into doing a HELOC, which is a home equity line of credit. That'll free up some cash. By the way, if you haven't got a first mortgage on a home yet and you're about to move into a home, you should consider getting a HELOC, home equity line of credit, as your first and only mortgage. For the same amount of total payments, you can sometimes pay off a HELOC in 6 to 8 years instead of 30. Why? Well, I don't have any stake in this game, but I found a website that talks about this. It's called replaceyourmortgage.com. And there's also, that's replaceyourmortgage.com. I don't know those guys, but I know that they have training on this. There's also a YouTube channel called VIP Financial Education. And the concept is called paycheck parking, where you basically put your paycheck and any spare money you ever have laying around, pay it down on your HELOC, and then pay your bills out of there. So Kathy, that's something you may want to consider. It'll actually help you pay down your mortgage much, much quicker. Like I said, I don't know if I told you this, I'm doing this myself. I actually have a HELOC and I'm paying it down as quickly as I can, keeping any cash balances. Like if I get a $10,000 commission, a real estate commission, I'll throw it into my HELOC, and that'll just, then I'll pay my bills out of there as needed. It's really powerful, and it takes some time to get your brain around it, but those websites might help. If you miss those websites, you can reach out to me. Hey, Dan Jenkins, I think you were commenting on my BiggerPockets article. Do you have any referrals for credible companies that handle self-directed IRAs? Yeah, there's a bunch. Equity trust companies, by far the largest, and they're pretty expensive. There's also CAMA plans, C-A-M-A. I'd recommend them, CAMA plans. And also Midland IRAs are really good to work with. We work with about 15 different IRA companies at my company, Wellings Capital. And I would recommend those companies. Callie says, my IRA is at max income limit. I currently own 3 buy and holds. I use a HELOC for purchase. Okay, good. Yeah, that makes sense. Someone says, thoughts on self-storage investing. Seems like relatively self-sustaining passive income stream. Is it only for advanced investors? Now, Jenna, you're talking my language. I've got a special report. It's actually a 30-page ebook I just created on self-storage investing. You can reach out to me at BiggerPockets to get a copy of our ebook, or you can go on to wellingscapital.com/resources. I absolutely love self-storage investing. I just wrote a 200-page book on it, and BiggerPockets is going to be publishing that in 2020. So I'll leave it at that. I will tell you that the subject of this whole 45-minute talk was about investing with the pros. And yeah, I would find an advanced or pro and invest with them. If you absolutely want to do it yourself, there's certainly ways to do that too. Gary says, is there a minimum amount for investing using a self-directed IRA? No, it depends on whatever you're investing in. If your investment you're investing in will allow you to, put in $10,000 or $50,000, you should certainly do that. Sandra says, I miss those sites. How can I reach out to you? Just go to Paul Moore on BiggerPockets. You can find me. I'm with Wellings, Wellings, Wellings Capital. So you'll know that I'm the right Paul Moore. Hopefully that helps. You can also go to info@wellingscapital.com and email us. Jesse says, I have a home paid off. Should I get a HELOC or refinance out? Yeah, I think you should consider a HELOC and refinance and consider that. Roland says, would you recommend buy and hold residential real estate rentals? I personally don't, but Roland, a lot of people do, and a lot of people are building a fortune through residential real estate like that, buy and hold. So you could consider that if that's the kind of thing you want to do. Wendy says, any suggestions for private money structure with friends and family that would look valuable if it was your money? Yeah, I would offer them like an 8 or 9 or 10% preferred return, which means they get the first money out, and then maybe a 70-30 split, 70% to the cash investors and 30% back to you. But you get a management fee along the way to keep your lights on as well. Lisa, we're in our 50s and are thinking about using our VA benefit to purchase a 4-unit. Is this the best financing? Is it too late to get started? Lisa, it's absolutely not too late to get started. I have really done the best real estate investing I've ever done since I was 50. And I actually expect that in my 60s, I'll even be better. So no, I think it's great. Someone says, what do you think about turning a home into an Airbnb? You know, I've got a friend named, what's his name? I got a friend, Nate. We've got a friend named Al, and Al has a great program on converting your home to an Airbnb and making big bucks. I talked to a couple guys the other day. You guys won't believe what I'm going to tell you. I talked about Airbnb investing about a year ago, and a couple guys got hold of me, and we talked about it. And then they called me the other day, and they said, we're now making, you guys ready? $50,000 to $70,000 gross per month on Airbnb and corporate rentals, and we don't own any of the units. It's called Airbnb arbitrage, and they said their profit margin is over 50%. So they're basically putting, what's that, 25 to 35,000 a month in their pocket from Airbnb corporate arbitrage. If you want to learn more about how to do that, reach out to me on BiggerPockets, and I can connect you with Al. Andy says, do you believe there's a recession coming in the near future, and how do you protect yourself from a recession? Yes, I believe there's a recession coming. I don't know when. I don't know how severe it'll be, but I believe it'll come. And the best way I know of is to invest in recession-resistant assets. That's what I would do. And those are mobile home parks and self-storage, perhaps senior living. Okay, so Dude Real Estate is about to upload a video on Airbnb arbitrage. Dude Real Estate, Nate, we don't know where to find it. Where do we find that video? Thank you. Do you have your own website where I can learn more about investing? Todd asks. Yes, it's Wellings Capital. That's WELLINGS CAPITAL, wellingscapital.com. Betancourt family. I've got a friend named Neil Betancourt. He's a drummer in Santa Cruz. I have a house paid off. For my next purchase, would you recommend a HELOC or conventional loan? Absolutely recommend a HELOC. And like I said, you can learn more about that at VIP Financial Education. The concept is paycheck parking, and I have no connection to them at all. I haven't even spent any time on that website, but I know it's helpful. Jeff says, should I buy a house now to retire into the future and Airbnb it in the meantime to pay down the mortgage? Yeah, you could do that, Jeff. People do that. And I think that's certainly something you could do. I'd highly recommend you consider corporate rentals and Airbnb. The combination is powerful. And like I said, I've got a friend named Al who can teach you about that. And so can Dude Real Estate, my friend Nate Shields. Hanson says, what do you believe is the hardest part of building your portfolio, and what have you found to be helpful with this? I think it's finding the right partners, finding the right syndicators, connecting yourself to honest, ethical, super high integrity, super, experienced people with a great team, and trusting them. Okay, so you can subscribe to Dude Real Estate on YouTube. I just found out. So thanks, Gary. Zachary says, I do B&B investing in Orlando. Anybody who needs help getting started or wants to partner with some deals, let me know. Okay, so go to see Zachary Young. Thanks, Zachary. Richard says, what do you advise you give a single person making $40,000 to $50,000 a year who's trying to purchase a duplex costing $250,000 to $350,000 and $300,000 in South Florida? Richard, South Florida has huge ups and huge downs. And if you hang on a little bit, if you can rent a little bit longer and build up your cash, I don't know, I can't predict, but there might be a downturn. If there is, you might be able to buy those same condos or townhomes or duplexes for maybe, 35, 40 cents on the dollar. And trust me, this has happened over and over in places like Florida, California, Nevada, and Arizona. Someone says, how can I get hold of you again? That's okay. You must be on the West Coast. You need your coffee. It's Paul Moore on BiggerPockets or Paul Moore at Wellings Capital. You can just go to info@wellingscapital.com. And like I said at the beginning of the show, I'm practicing what I preach here. We are investing passively, and we pull together a bunch of investors together, and we invest in these large commercial deals. It's what I do. It's what I love to do. And you can join us if you're an accredited investor. Brandon says, my aunt owes $53,000 on a home. It's worth $80,000. I want to have her put me on the deed. Then I want to get a home equity loan to pay her off. Very little out of pocket for me. Is that possible? Well, if the house is worth $80,000 and there's already a loan for $53,000, there's going to be very little room, Brandon, to get a home equity loan. You might be able to, pay her some, but I don't think that you can pay her off, unless I just misunderstood. Real Shooters says, I'm moving back to Orlando, live there. Okay. Charles says, I want to start in real estate and have no startup money. Okay, so wholesaling might be a way for you, or you may want to try lease option sandwiches. I don't have time to explain lease option or rent to own sandwiches, but you can Google that. I don't know if there's any books about it, but rent to own or lease option sandwiches or wholesaling would be a way to get started in real estate with no cash. Definitely Arizona houses here went for $70,000 to $130,000. Now they're worth $250,000. Yeah, and in a recession they may go down. Real Shooter says, my question was above and I skipped it. That's rude. Man, how could I be so rude? Just skip your question. You said I have about $7,000 looking to start rentals through Airbnb to get cash flowing coming in before jumping into 16 unit buildings. Okay. How do you feel about that? Yeah, I would take the $7,000, get a short-term lease on a nice apartment or something, outfit it really nice, get professional photography, and then do corporate rentals and Airbnb and start building up your cash stash. Okay. And like I said, I can help with that if you reach out to me, and I can tell you about a program on that. And then Dude Real Estate is going to be promoting a video on Airbnb and hopefully corporate rentals as well. So we're coming to the end of our show. So this is what we call the fire round. And I didn't say it like David Green and Brandon, but anyway, I'm going to just quickly answer a few more questions and then we're going to call it a wrap. So again, I'm Paul Moore. I'm with BiggerPockets and Wellings Capital. And I hope that this has been helpful to you. If you have one last question, shoot it out and we'll go from there. So hello from Uzbekistan. What to do if the mortgage is around 28% and the mortgage payments are higher than the rent payment income? What to start from? Yeah, I wouldn't do that deal. I mean, that's the best thing I can tell you. And especially if the mortgage is only 28%. I think I know what you're saying, but still. Are you going to the BiggerPockets conference in Nashville? Yes, I am. I'm going to be speaking there on Tuesday afternoon. So if you're coming to the BiggerPockets conference in Nashville, October 6th through 8th, I'll see you there. If you're not, why? You ought to be there. October 6th through 8th in Nashville, 2 weeks, or maybe it's 3 weeks from now in Nashville, Tennessee. You really should be there. Do you have an email? It might be easier. I'm not sure if you're talking to me, but it's info@wellingscapital.com. What should I invest in a Fidelity Roth IRA? Richard, I don't know. Maybe somebody else can answer that. I invest in real estate. I don't do Fidelity anymore. I did it for years. I don't anymore. Kazi said, is there a way to get commercial loan with below 20%? Even with very strong cash flow and being personal guarantor? I definitely want to be below 20, maybe 5 to 10% max. Kazi, can you explain 20% of what? Maybe I'm being obtuse here. I'm just not clear on what you're saying. And I'll try to answer before we wrap up. Mr. Kite says, I have $150,000 investment condo equity, but upside is done. Probably have any advice for how to grow $150,000 more? Depends how much cash you have available, Mr. Kite. Not sure how to answer that. Best way to choose a submarket. Join BiggerPockets Pro. Get our neighborhood scout at a discount. There's also other programs online where you can learn about that type of thing. Kazi asked for some owner financing to offset down payment. Yeah, excellent. J.K. Lim says 100% real estate. Yeah, I invest in 100% real estate. I love real estate. I feel like with 19 years experience, I can evaluate it better than I can any stocks or bonds or mutual funds. And maybe that is not what other people would say, but that's what I do. Nathan says, how to buy a small multi-unit with no money and no credit. Partner with somebody, Nathan. That's what I would do. That's my best answer. You put in the time, you bring the deal, and you find somebody else with the money. Can I turn a commercial property into apartments above, incubator office below? Yes, it can be a profitable idea, Tony. But like Nate just said, you're going to want to be in the path of progress. Do you have a HELOC strategy? I want to do that. Yeah, I don't have a specific HELOC strategy except remember replaceyourmortgage.com or the YouTube channel VIP Financial Education. And again, I don't have any connection to them. Are you available as a remote guest speaker? Yes, Dan, I do that quite often. And yes, I'd be glad to do that. You can reach out info@wellingscapital.com. Thanks for asking. Cali Valley says cash stash versus emergency fund. I had a large amount sitting around not earning. I put in a buy and hold and now it pays me. Can you expand on cash stash? Callie, I don't know how to answer that question. You've stumped me again. Can you expand on what that means? John Fair says, can an owner remain anonymous from their tenants through a property management company? Absolutely, you can. And you can also use a land trust to do that. A land trust can help you even more. Tu Fang, hey Tu, good to hear from you again. Will you be coming to the Twin Cities this weekend? Unfortunately not. I had something else come up and I was not able to be there for the event. But if you're in the Twin Cities, you should definitely check out the event put on by our friend, our BiggerPockets friend. I can't remember their website, but there's an event, a big real estate event in Tu Fang. Can you just tell us briefly where to find that event if you're in the Minneapolis area? Can I turn a commercial property into apartments above? I already answered that. JK says, sir, I have $200,000 in equity. What can I do? I want to use it to buy and flip in California. A lot of people are really nervous about buying and flipping in California. I would recommend a different area. Some people say Florida, Alabama, Georgia. Yeah, I would try Florida very, very sparingly. I would try Alabama or Georgia before I would do that. Okay, so Dude Real Estate, Nate Shields, thank you for your help on this call. BiggerPockets, thank you. If you're not signed up for the BiggerPockets big event in Nashville at the Gaylord Resort, please do so at biggerpockets.com. If you haven't signed up as a BiggerPockets Pro member, please do so. I think you'll be really, really happy that you did. If I didn't get to your question, I'm very sorry. But again, you can visit us. You can ask me. You can reach out to me at BiggerPockets. My name's Paul Moore. I'm with a company called Wellings Capital and would love to meet up with you or talk with you there. Okay, thank you so much. Have a great rest of your week and hope to see some of you in 3 weeks in Nashville. Have a great day. See ya.